Can you really trust the Lendio this year if you are looking for a business funding? Let's talk about that. I mean, the thing is that Lendio has been around for a while, and a lot of entrepreneurs, a lot of business owners are really asking whether or not Lendio is actually the platform that they need this year to actually apply for business loans, business lines of credits, all kinds of business funding. So let me first talk to you quickly about what Lendio really is and what the company is also not. Okay, because there is some confusion as to what Lendio really represents. So Lendio is a one-stop shop business lending marketplace. So I want to insist on that, a lending marketplace that connects prospective borrowers to its network of lenders. So what happens here is that Lendio does have a network of lenders similar to Lenza or Clarify Capital or National Business Capital. Okay, so this is a lending marketplace, and the cool thing is that Lendio actually does have let's say lenders that they have about 79, 75 to 85 lenders in their network. So that's kind of cool. So that's really good because it gives them access. Okay, the company can actually help you apply for various small business loans and receive various loan offers if you qualify. So this multiplicity of offers is actually the core advantage, the core edge that Lendio brings to the marketplace. So this is kind of cool. And the company actually is known for its fast application and quick turnaround time on loan decisions. So you can actually get a decision rendered on your application within 24 hours. So if you apply in the morning, let's say by 9 a.m. Eastern, by 6 p.m. Eastern, you could potentially get a decision. So that's how fast Lendio really is. But I just want to insist on the fact that Lendio is not a direct lender. So you won't know your rates or terms until you apply or receive offers from the direct lender, like the lending institution that's going to service your loan or whatever financing program you have. And but Lendio actually is a free service, so there is no cost to apply. Lendio receives compensation from lenders when it successfully funds you funding. Okay, the company actually started about 15 to 20 years ago. Okay, so that tells you a lot about the a proven track record that they have established over the last 2 decades. And by the way, they are based in Utah. So let me explain to you how Lendio works, so you have a clear idea. So Lendio actually matches your when you apply on Lendio's website, they take your application and then match it to lenders, okay, that you would most likely to qualify for, as well as loan options that best suit your needs, right? Because they ask you a couple of questions during the application process that will help them actually see where you could qualify. See, the whole thing is that they make money when they are able to place you a lender, when they're able to match you with a lender. So they make sure they ask you as many questions as possible to be able to know exactly the best lender for you, right? So it offers this platform Lendio offers a suite of financing products through its lender networks. So it's a lender network. So you have a business term loan, short-term loan, business lines of credit, business cash advances. You have accounts receivable financing. You have equipment financing. You have SBA loan, commercial mortgages, startup business loans, and business acquisition loans. Let me go a little bit in details here so you know exactly what you expect if you go with either option, with one option or the other. Let me first talk about the business term loan. Here, the loan amount ranges from 5,000 all the way to $2 million. The interest rate starts at about 6%, and terms here 2 to 10 years, and the funding can happen as soon as 24 hours, as long as you have the paperwork ready. And so you get a large sum of money up front and repay the loan plus interest and fixed payments. And Lendio business term loans carry daily, weekly, or monthly payments. You can also use the funds for working capital needs, purchasing or upgrading equipment or software business acquisitions, etc. So these loans are actually great for you if you want to finance, let's say, a large one-time project or business need. You also have a short-term loan. So short-term loan actually goes from $2,500 to half a million. And here interest rates go from 8% to 36%. And you have up to 18 months. That's the repayment window, up to 18 months. And the funding time actually goes from 3 to 10 business days. That's really good. And but the short-term loans are relatively harder to qualify for than traditional term loans. Okay. What about business lines of credit? Here you can actually raise a maximum of half a million, so 1,000 to one to $500,000. Interest rates go from 8% to 24%. The terms here 1 to 2 years, so the repayment window, like every 2 years, you might have to let's say review the account with the lender. Okay, and the funding time with a business line of credit through Lendio takes a little longer, so probably 1 to 2 weeks. Okay, but the cool thing is that with a business line of credit, you have flexibility and you have also liquidity all at all times. Okay, so Lendio offers both revolving lines of credit and non-revolving lines of credit. So this is kind of cool from a flexibility point of view. What about a business cash advance? So if you think about Lendio, through Lendio you can have a business cash advance. Here you're looking at 5,000 all the way to $2 million. The rates here starts at about 18%, terms up to 2 years, and the funding time as soon as 24 hours in some cases. Okay, so a business cash advance, sometimes called MCA, so merchant cash advance, provides actually a large sum upfront, repaid with a percentage of your future sales. So this is really good because this form of financing is more accessible for borrowers with bad credit and provides actually quick funding. And also, MCAs are technically not loans if you think about it, because the financing company is purchasing a percentage of your future income. So this is revenue-based financing. Okay, and this is something to really think about. You also have accounts receivable financing, and here you can have up to 90% of receivables, and the rate starts at about 3%. In terms here, you're looking at up to 1 year, and the funding time as soon as 24 hours in some cases. So this is something that you need to really think about. And accounts receivable financing actually turns your unpaid invoices into an immediate cash advance. And this form of funding is suitable for companies that experience cash flow interruptions due to, let's say, the delay between delivering goods or services and receiving payments for them, right? So you have a delay between cash receivables, sorry, between accounts receivable and accounts payable. So the way things work is that the way things work, you have the company, the financing company, also known as the factoring company or factor, issuing a cash advance based on the invoice's value, typically 80% to 90%. And when your customers pay their invoices, it goes directly to the factoring company. Okay. And you also have another type of financing, and that's actually equipment financing. Oh, by the way, before I finish on this, you have to understand that financing companies charge a factoring fee for the service, which is usually a percentage of the invoice, and the fee is sometimes called a discount rate because the company essentially purchases the invoice at a discount. So it's about 3%, 3 to 5%. And then you have equipment financing. Here you have loan amounts that range from 5,000 to $5 million. The interest rate starts at about 7.5%, and terms 1 to 5 years, and funding time as soon as 24 hours in some cases. So equipment financing allows small businesses to acquire needed equipment on credit, and business equipment includes everything from construction to medical office equipment to computers, software, and office furniture. And Lendio offers equipment leases or loans with its financing program. And this form of asset-based financing uses the equipment as collateral, really. And this is known as a self collateralized loan, similar to a car loan or a mortgage. So this is kind of cool. So you also have SBA loan. I'm still going through some of the loan offerings that Lendio has. So you have SBA loan also, and the SBA loan actually it's here you have a government backed loan, so up to $5 million. You're looking at up to 30 years for commercial real estate, otherwise 10 years. Okay, and so what happens here is that Lendio will connect you to SBA approved lenders, including banks and credit unions. And so the backing from the SBA lowers the lender's risk, allowing it to offer higher loan amounts, okay, at lower rates and extended repayment terms. So this is really good. You also have commercial mortgages. Here you're looking at loan amounts that go from $250,000 to $5 million. And here you have interest rates that starts at about 4.5% to 6%. And the terms here 20 to 25 years, and you can be funded within 25 to 45 days. Okay, and so a commercial loan is a loan to acquire, develop, renovate, or refinance a commercial property. And companies use these loans for retail stores, warehouses, factories, and more. So you have flexibility and possibilities too. You also have startup business loans. So through Lendio, you can actually get business funding for your brand new business. Okay, here you can get a maximum of $750,000, and the interest rates go from 0.5% to 17%, depending on your sector, your economic sector, your credit score, your company's also financials. Okay, at least projected financials. And terms here up to 25 years, and funding time 2 to 4 weeks, depending on the lender. And then you also have a business acquisition loan. You can also get search funding through Lendio. And here I'm looking at loan amounts that go from $5,000 all the way to $5 million. And so the starting rates here in terms of APR is about 5%, 6%. And those loans actually allow you to repay, depending on the setup. If you have a revolving line of credit for business acquisition, you have like the window revolves. But if you have a loan term, you are looking at 10 to 25 years, and the funding time can be as soon as 30 days. So what are the qualifications for Lendio? If you think about, first of all, I think that you'll still remember that Lendio is a marketplace, right? So Lendio is not actually having specific requirements based on the loan. They actually just listen to their lenders, and they're trying to have a set of standards for every specific loan. So for the business term loan, a credit score of about 600 to 680 is required. Time in business 2 years, revenue $8,000 monthly. Business line of credit score 500 to 560. Time in business 6 months minimum. Revenue $50,000 annually. For equipment financing, credit score 600 minimum. Time in business 1 year. Revenue $50K. Now, the revenue with equipment financing is lower because this is a collateralized loan. If you think about it, you do have an SBA loan. So time in business for SBA loans 2 years. Revenue $8,000, and credit score 600. For commercial mortgage, you have 600. Time in business 6 months, okay, and revenue $8,000. For a startup business loan, credit score about 600 to 680. Time in business 3 months, that's the minimum, and revenue $6,000 monthly. And for a business acquisition loan, the credit score 500 to 600 minimum. Time in business 6 months, and the revenue $8,000. So you can see that the requirements vary depending on the loan. Okay, so just remember that the company shares your info with its lending partners, which could lead you to being contacted by third parties in the future. So if you are concerned about privacy and protecting your business information, you may want to consider a different lending option. So while the company offers a convenient application and fast decisions, funding times can take longer than other alternative lending options because some products can provide funding within 24 hours of approval, but the average is 3 to 10 business days, okay? So something to really keep in mind this year. And while the Lendio website advertises a quick application process, actually, the one aspect that could delay the process is the required documentation. Lendio has more documentation requirements than most alternative lending options on the market. So, and when you apply, the company only performs a soft credit check, which won't affect your credit, okay? So, however, after you accept an offer from one of its lending partners, that lender may perform a hard credit inquiry during underwriting, which will impact your credit score. So how do you apply for a Lendio small business loan? Well, you need to fill out the application, okay? Answer basic questions about yourself, your business, and your funding needs. And so about 3 to 15 minutes, you need to connect with a funding specialist, okay? Somebody from Lendio will contact you to discuss your business and needs. You might have to provide additional documentation depending on the loan that you want. And you have to compare loan offers and choose your loan and get funded. Okay, so it can be as fast as possible. So what are the advantages of Lendio as a lending marketplace? Well, the company provides a convenient online application when you actually that you can complete in minutes, right? It then takes your application and sends it to lenders in its network of more than 75 lenders where you are most likely to qualify. So this process alone saves you significant legwork and stress trying to find a lender. So you have a streamlined application. So due to the number of online lenders it works with, Lendio can offer you, let's say, over a dozen financing programs and high borrowing amounts. So the qualifications are typically lower than banks. You can get pre-qualified on the same day you apply, and qualified applicants also get a dedicated funding specialist to assist with the process. So that's really good. Unlike some alternative lending sources, you can get long-term financing. Okay, that's really cool, such as SBA loans, term loans, and commercial mortgages. And so, on the flip side, the disadvantages. While the application process is quick, one caveat is that there are usually exhaustive documentation requirements. The rates and fees on some products can be expensive too, but you will never know until you talk to the lenders. Okay, so good to know. And the time to receive your funds can take a while, depending on the loan type that you have. So while Lendio is generally faster than banks, it can be much slower than other alternative lending options. So what are the pros and cons? So pros: convenient online application with fast pre-qualification decisions. You have a network of 75 plus lenders, high borrowing amounts and long-term financing available, lower qualifications than banks and credit unions, and you're able to save time. Okay. On the flip side, again, you might require extensive documentation to apply. Rates and fees can be expensive. So overall, if you think about Lendio, think about a very legit lending network. Okay, and Lendio does not do a hard credit pull; they do a soft credit pull. Okay, and but they will match you with a lender depending on your application and also their fundings during the underwriting process. So think about Lendio as a platform that's actually suitable for all kinds of businesses, regardless of their credit score or financial profile. So, in conclusion to this conversation, I spoke to you about Lendio. I told you what Lendio really is, how the platform works, what are the qualifications, and how to apply, what are the advantages and the disadvantages. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.